What is going on, YouTube Nation? This is Darth Dividend, and if you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have three energy stocks that you should check out right now, and they do yield a high dividend yield as well, and they're pretty stable companies. So if you are new to my channel, this channel's for you guys. I don't believe in charging anyone. I don't believe in having a Patreon account and telling you, oh, pay $5 a month. I'll tell you what stocks I'm looking at or changes or this and that. I show you everything on here. All I ask you to do is just follow this channel, comment, be active. That's all I ask for. We're almost at 4,000 members strong on this channel, and you guys have been fantastic. So let's check this out right now. So the first stock I would like to introduce you to is First Energy Corporation. Now, I am from Northeast Ohio. First Energy Corp is a juggernaut when it comes to many companies, and I'll show you where it's located and the revenue of how much they've done. But they have not done very well against the S&P as of late. So this is a stock that is great for dividends and has increased its dividend over time. I always tell you, okay, if I had a Roth IRA or traditional IRA, would I add this to it? No. This is strictly a dividend stock with a very great and solid dividend yield. So I'm going to show you financially real quick how they've done. So revenue-wise, December 2019, a little bit down, 2.48 billion, 2.71, 2.52, 3.02 billion for their quarterly financials. So they are increasing. Now, I'm going to show you why there's such a juggernaut in my state of Ohio, as well as other states real quick. And I'll show you how far their territory is. So First Energy is a juggernaut, okay? And first of all, they did have some issues with bribery in Northeast Ohio, especially where the area where I'm at with Larry Householder, and their price per share is down a little bit because of corruption issues. But this energy company, it controls approximately 3,780 megawatts from regulated scrub coal and hydro facilities in West Virginia, New Jersey, and Virginia. So in Ohio, okay, this is our state and how much they control. They control the Toledo area. Now, I'm from Northeast Ohio. I'm right up in this area. So they control this area. Look at how powerful they are with Pennsylvania. And just by the states they run, that's pretty powerful, okay, with what they own. So these guys is a company run kind of this area, and eventually they probably will expand. Now, First Energy Stadium, what a surprise. Okay, that's my Browns that they have the name of. And look at this, Virginia, West Virginia, a little bit of Maryland, New Jersey, Pennsylvania, and Ohio. So you have these facilities, okay. I have no control over what happens, okay, in my complex. First Energy runs the show over here, and I'm just stuck, okay. I have to deal with these guys. Same with everyone in Northeast Ohio and across the state. So let's think about this. Controls a bunch of states, revenue's up, and let's look at its dividend history. So First Energy at this moment has a 4.93% dividend yield. Has increased its share. You see there's a little bit of a hit right there at 55 cents, but has increased from 36 cents share to 38 cents to 39 cents. So it is increasing its dividend over time, slowly, but 39 cents with a 4.93% dividend yield. Annual dividend as of right now is $1.56. So this is good, okay? This is good. This stock has increased its dividend. Its revenue has increased. It is a juggernaut. So we're going to jump to the next energy stock. This stock would be Enbridge, which is pretty much in the originators by Calgary, Alberta, Canada, where they really praise these guys. These are a very strong energy company. Financially, Okay, September a little bit down. Their revenue has decreased. I'm sorry, it increased, then it decreased, then it decreased again. But again, it's slowly recovering. $9.1 billion is very nice right now. So the operating income's up, the net income is up, net profit margin is increased. Let's look at what enbridge is about in their territory, because you want to, if you own, honestly, if you own a energy stock, you need to know their territory. That's a big thing. Real estate investment trusts know how their territory, what, how many buildings they own. You got to know territory when it comes to um, energy stocks. Now financial stocks, like banks and stuff, just know how much they kind of generate revenue wise. Banks, they usually fix themselves if they have serious issues. But Enbridge, First Energy, we need to know what the heck's going on with these guys. How far are they? Who do they control? How big are they? All right, let's check this out. Okay, so Enbridge, okay. Here, first of all, they increase their dividend increase. All right, that's good. But, okay, they're a huge network, natural gas pipelines, regulated natural gas distribution, crude oil, liquids, and okay. So, first of all, let's look at some of their locations. Okay, Houston, Texas, Duluth, Minnesota, Edina, Houston, Lansing, Murray. Okay. So they like to show what they're doing right now, revenue, gross profit, their share price, okay, their market cap right here. This is nice, okay. But we need to see how they're doing in, see what I liked about these guys too is they show their competitors, like how they're doing. Um, locations, Calgary, okay, Edmonton, locations. This is big areas, man. Okay, Toronto. Okay, look at how big this is. Okay, this is big. Okay, Edmonton, Canada, Toronto. I guess they're in Venice, which I didn't know. United Kingdom. So they're a big juggernaut right here. Okay, and I like how they show their their competitors right here. I'm just looking at this. Very interesting. I'm glad that these guys seem like they're going nowhere. I mean, like they're only the future is bright with these guys. So let's see how they're doing with their dividend, because they just said they increased their dividend. Oh yeah, look at that. So compound annual growth rate of 10% over the last 26 years. Okay, that is really good. And they really puffed their chest about this. Dividend info, quarterly amount 83 cents. Payment date is March 1st. The record date is February 12th. He said, we have a consistent track record of delivering annual dividend increases, and our continuing goal is to deliver superior shareholder returns through capital appreciation dividends. I'm a dividend investor. I like this. I like the Benjamins. 26 years. Okay, these are Canadian dollars per share, but let's go into US dollars. Okay, here we go. Aha, there we go. So they announced a 3% of their overall dividend per share, increasing the quarterly dividend 83 cents. It translates to a $3.34 dividend per share on an annual basis of 2021. Over the past 26 years, the dividend has grown an average compound annual rate of 10%. Equally important, our dividend growth has not come yet to the expense of our financial strength, as our dividend payout ratio is expected to remain with our target dividend payout ratio, which is between 60 to 70% DCF, providing a healthy balance between returning income to shareholders and retaining income for reinvestment in new growth opportunities. Love this. Now I'm going to show you, I showed you this part, but let me just show you, oh, here we go. They have a PDF. Now this is what I like about these guys. Look at the increases they've had over the years. Imagine if you invested them in 89 and how high that is at the end. Let me just show you their dividend history on another graph. Okay, so you're looking at 2017, 61. Okay, you're looking at 2017, 61 cents. 2018, 67.1 cents. December 2018, 73 cents. Okay, you're seeing the increases. November 4th, 2020, 81 cents. So this has increased its dividend over time. This is what we like. This is what we want to see as dividend investors. We're going to jump to the final stock right now. That stock would be Exxon Mobil. Now, recently, it has dropped, and many people freaked out when the Dow Jones kicked them out. Okay, I'm pretty sure it was the Dow Jones. If I'm wrong, correct me, but you can correct me at any time. But Exxon has not done well recently against the S&P. And what are we going to do? Okay, but look at Exxon Mobil. Okay, now financially they took a hit. Okay, there's no ifs, ands, or buts. Look at this, June 52 point. Okay, but its revenue is slowly increasing. If you look at 32.28 billion, it dropped 50%. And then September, it's slowly getting up. So only 45.43 billion. You notice I said only 45.43 million or billions, excuse me. So this stock is still, okay, it's still not too bad. And what's important about Exxon, which I'll show you. So the thing that makes ExxonMobil a strong company, okay, is they have been there, done that. And as a company, okay, you adapt to change. And if you don't, like if you're Sears, you're not going to win. Okay, and in 2018, this company was ranked second in the Fortune 500 rankings of the largest United States corporations by total revenue. Electronic vehicles are probably going to be the next change, but that's going to take a long time. And by that time, ExxonMobil could acquire other companies and adapt, but they have done so well. Their primary brands are ExxonMobil Esso and ExxonMobil Chemical. Okay, we're still going to have plastic. Okay, how is plastic made? Let's think about that. How is plastic made? All right, so ExxonMobil is the 7th largest refiner in the world. Okay, not all of these countries are going to adapt that fast to electronic vehicles. All right. I know that that's the next wave. And I know burning fossil fuels is bad. It is. Okay. And to an extent, climate change, or I would say global warming / climate change, whatever you want to call it, to an extent, and even President Trump said when he was interviewed in the debate, to an extent, he believes that global warming can affect the weather. This company, I'm going to tell you, is not going to fall. Okay? They are not going to fall. They will adapt. They have been so successful in the past. And them and BP and all these guys are still going to be around. So I'm going to show you their dividend history real quick. 2015, it was 73 cents a share. 2018, 77 cents a share. 2020, 87 cents a share. Has increased its dividend. Dividend yield is 7.27%. Again, it's going to be difficult to try to drop everything and convert to a electric powered car. everybody wants to drive a Tesla. Don't get me wrong. People, I see countries like Vietnam and all these other countries that really can't afford to make these big changes so fast. Uh, I don't think they're going to have electronic vehicles. I could be wrong, but one of the reasons why I invested in Exxon is they are a very good distributive oil, and you're going to need oil for products, for plastic. Plastic's still going to be out there. I don't care if you ban straws or whatever you ban. I mean, there's going to be things that are plastic, maybe recyclable. You're still, recycling's good. I saw things with the European Union, what they're doing with incinerating garbage at a very hot temperature to make things very clean. So there are a lot of uses of burning plastics too. If you use it to heat, and you can actually generate energy. I watched a video with in Tokyo. They were trying to figure out their landfill crisis, and they burn garbage now to such a high temperature that really the only byproducts are CO2 and water. So, countries like China, I really don't think, I don't see them caring, if there's a big climate change meeting, or, let's just say they're told by people or big countries, clean up your act, you're generating too much pollution. And the demand for Chinese work and, gas and stuff is still going to be there. The countries like India, people probably won't be able to afford electronic vehicles. So, these guys probably could distribute to India and a lot of these countries that just can't afford it. So, you know, oil's still going to be around. It's not going to be eradicated. It'll still have use. And Exxon, I see, will adapt to those changes. So let me know what you think, especially Exxon. What do you think is going to go on with these guys? I'm just giving you a summary of my thought process from a business standpoint. Again, I'm a registered nurse, but thinking about adapting to change, that's what you do in life. And as a business, either you adapt or you don't adapt. Because look at Sears, they're done. Their warehouses, their Sears buildings are now nice Planet Fitness facilities. Planet Fitness is taking advantage of Sears going down the tubes. So Exxon is a very interesting stock, and I really am curious to see what you guys think of Exxon and its future. So give me a comment. I had to really reflect on this with Exxon. I had to edit this like 4 or 5 times, like with my thought process, and see which direction and flow I had to go through. It's just very interesting to see if these guys can adapt or how they adapt. So, again, let me know. First Energy, Enbridge, and Exxon. What do you think? Good stocks or not good stocks? So, you guys have a good one and take care.